Hey guys, welcome back to the channel. So today, the topic that I wanted to cover is actually credit scores. Throughout a lot of, the last previous years, my family and friends usually come out to me and ask about credit scores and how they work. Having had the experience from my days, back as a banker, I'm pretty knowledgeable about the fact. I don't consider myself to be an expert. I don't call myself an expert in anything, right? There's always so much more information out there. However, I can share with you some basic concepts about credit, right? So basically, the way credit scores work and why we should all care about them really is probably where I should start, is the fact that you gotta understand that, society is so big now, right? Back in the days, in little towns and stuff, people probably knew each other by name and could probably say, oh yeah, I can vouch for that guy. That guy's good for it and things like that. Obviously, when you live in a country with millions and millions of people, that's kind of hard to do, right? So basically what happens is that we're all given a credit score. This is the way it works for me in my mind anyway, is we're all given a credit score, and that credit score basically tracks our financial history. Tracks a lot of other things too, but primarily, people use it to see how you handle your finances, in particular, your payment obligations. Why should we care, right? Well, for starters, just about everything in this country is based off of a credit score. There's a lot of different ways to do things without depending on credit, but that takes getting a little bit more creative. And generally, a lot of people just aren't willing to look into that type of stuff. In fact, a lot of people, I'd be surprised if they even see this video, to try to learn about the credit scores that do affect them in everyday life. Anyway, just to get to it, that's why you should care. A bad credit score is going to hurt you in the long term. It's going to make it very difficult, very expensive for you to get into your first car, into your first apartment, into your first house, a lot of your firsts, right? Because these lenders that you're going to give you an opportunity to live in the house that you want, to buy the car that you want, well, they want to know, can we depend on you to pay us back? And so that's basically where your credit score comes in. Now, who gives them this information? So typically, there's a lot of different reporting agencies out there, but the main three credit bureaus that you'll usually hear about are TransUnion, Equifax, and Experian, right? So anytime you go with a reputable lender, they all should be reporting to all three credit bureaus. I say should because they're supposed to, but it doesn't really happen. A lot of times they'll report to 2 out of 3, sometimes maybe even be as bad as just 1 out of 3. So that's why it's always very important to make sure that you're checking your credit report at least once a year to make sure that everything's reporting the same across the board. So on that note, please do know that we are allowed to, by law, to get a free copy of our credit report at least once a year. You can get that by going to annualcreditreport.com. If you go there, just make sure that you go when you have some time, because when you go on there, it's going to ask you some questions to verify your identity. And then after that, it's going to hop you to all three bureaus. And if I'm not mistaken, make sure you have access to a printer, because you're going to be able to view your report. You're going to have to print it before it hops to the next one. If you go back, it will not show you the report again. You will have to pay for it. So make sure that when you go on there, you're ready with everything that you want. You're able to save it as a PDF or have a printer handy so you can go ahead and print your report and look over it, when you have a little bit more time, to make sure that everything's reporting the way that it's supposed to be. So how's your credit score calculated? There's a lot of different formulas to this. To be honest with you, I'm not sure if there's one in particular that's correct. I've seen a lot of different percentage breakdowns as far as your payment history is like this percentage and your debt utilization is this percentage, and so on and so forth. Again, not an expert here, just here to give you basically, the basics of what you need to succeed. So the main factors though that do go into it, number one would be your payment history. So they do look to see how good of a track record do you have when it comes to paying back your debts. The better you do, the better that category ranks, which overall raises your credit report, okay? The next one would be your credit utilization. This is the hardest one for most people to understand, okay? So think of it this way. Please remember, the system that keeps your credit score, is not a person. There's no logic here, okay? It's a system that just runs on numbers. And so what credit utilization is that it looks to see, based off of what your total amount of credit available is, how much are you using? But it looks at it in two different aspects, okay? One is, it looks at basically all your credit cards or all your credit lines added together and how much in total you're utilizing. So let's say you got 5 different credit cards, all with $2,000 credit limits, right? So you have a total of $10,000 in credit card limit available, right? and you're utilizing $2,000. Well, that's a 20% utilization, which is actually pretty good. You know, obviously the lower debt, the better, but as far as your credit score is concerned, that's pretty good. As long as you can maintain 30% or below, it's pretty good. However, here's a caveat. Let's say that $2,000 limit is on one credit card. So you have 4 credit cards that have a 0 balance, but you have one that's technically maxed out. That in particular hurts your credit score tremendously, right? Because that one creditor is reporting, hey, this guy is like about to tap out. He's maxed out. He can't handle his credit cards, okay? And again, there's nobody, like no actual human interaction looking at that and saying, well, yeah, but he's got these other, 4 that are in use. No, it sounds like an alarm that's saying, hey, this person seems to be trending on the path of going and maximizing their credit. So make sure that if there's a way that logistically makes sense for you, if you absolutely have to use credit card debt, that you can kind of sprinkle it out across your cards so that not one card in particular is over 50% utilization, but in all your limits combined, that you never exceed 30%. That would be my tip to you. The next thing is basically the length of credit history, okay? So this is one that sometimes seems a little bit unfair because it's like, well, if you're barely 18 or 19, what can you do about that, right? I mean, you can't start credit till you're 18. How are you supposed to have a good track record if just time is working against you? It's true. However, also try to look at it from the lender's perspective and say, well, for the same reason, I mean, yeah, you've been paying your bills on time for 6 months or a year. Great job, you're on the right track. However, it's kind of hard for us to give you this home loan, for $400,000 or auto loan for $40,000 if you've only been paying credit cards for 6 months. It's a little bit hard. Something you can do to try to, improve this is that if you have a family member, parents, siblings, anybody who has a good credit score, if they're okay with it, I would recommend that you have them add you as a co-owner or a co-applicant on their existing credit cards, particularly one that they've had longer and that they've had a good payment history on. Because then what will happen is that card's history will start reporting on your credit bureau, and then it'll help with that length of time history. It'll make your credit shoot right up. Okay, so that's something I do recommend if you happen to have somebody trustworthy that would be willing to add you to one of their cards just to share some of their history with you. The next thing is the types of credit used. Okay, so this one is a little bit tricky because going back to that example, right? I remember being 18 years old. I had nothing but credit cards. When I was 19, I went to go buy a house and I was being told that I couldn't get a home loan. And I was like, well, why not? You're crazy. I have a 740 credit score. I mean, I qualify. And they're like, yeah, kid, but you only have credit history for 1 year and all your credit type is credit card debt. So the reason the type matters is because your payments are not the same across all platforms. So for example, on a credit card, right? Let's say you had a $10,000 credit card with a $10,000 limit, and you had $5,000 that you owed on it. Well, as you know, when your payment comes in, the payment that you're actually responsible for, which is your minimum payment, is actually a lot less than it would be, for example, if you had a $5,000 loan that you had to repay in a year or 24 months. And that's basically the difference. They want to know, how do you handle bigger payments? Credit cards are very popular in this country because of their flexibility. It's very easy to, if you're having a bad month and barely scraping by, very easy to just send a minimum payment and buy yourself some time. With things called installment loans, which is basically a loan that has to be repaid in a specified amount of time, your payments are going to be higher and thus, more challenging to make. So for that reason, they want to know, how do you handle those scenarios? Obviously owing $30,000 in credit card debt or having a $30,000 auto loan, your payments are going to be vastly different. And so that's why they like seeing a variety of different loans on your credit report to see, how do you handle each situation? Are you a responsible borrower in each one of those cases? Okay. And the next thing would pretty much just be your credit application count. And this one is very important just because it lets them know, what are you up to, right? If you have a lot of applications because you're applying for a credit card here and there, and 15 other places, it gives the impression that you're desperate. You're desperate for credit. And if you're desperate for credit, you must be in a financial bind. That's the logic behind this, right? Not always necessarily the case. Sometimes you might just be shopping for the best rate, for that auto, or for that home that you're looking to buy. But again, there is no person looking at this. It's just a system with just numbers, right? So what they're looking at is that the probability is that you are going to be a risk because you're just applying everywhere, and the possibility of you obtaining and overextending yourself on credit is very possible. So always keep that in mind. I always recommend try to keep your credit inquiries down to a minimum, just only for when you truly are looking to get some sort of credit. And even when you go buy a car, or if you're applying for a home, try to just do it with, get pre-qualified at your bank or your credit union so that you can only have one inquiry on your credit and get a pre-approval. Because when you go to these car dealerships or these brokerages, they'll shoot your credit everywhere just to see who can get you the best deal, which is great. But at the same time, 6, 7 different companies just pulled your credit. And they always say it doesn't matter because, bank will understand, they were all done on the same day. You're just credit shopping. It's true, but let me tell you, it still makes things a lot more difficult because mostly everybody just does their job to a minimum and puts in the credit application, and then that's it. If the credit score doesn't come back where it needs to because 8 people pulled your credit on one day, a lot of these sales reps are gonna stop there. Now, if they went the extra mile and actually took your file to an underwriter and said, hey, listen, I understand, but their credit score is probably this low because they're shopping, look at it, all these were in the same day, maybe. But the amount of people who actually go above and beyond like that these days, I hate to say it, just not very common. So do yourself a favor and just buy yourself time and don't allow them to do that. Just be very cautious with who you allow to pull your credit from the very beginning, and you can save yourself a lot of time down the road. Pretty much, guys, that's about it. As far as like what I tell friends and family regarding credit scores, if I missed anything out there, I can talk about credit score ranges because what's considered good credit these days is very, it's a wide margin. Back in the day, we say anything above a 650 credit score was a good credit score. These days, it really depends as to what's in the credit score. I would still say anything above 680 maybe is better now. Top tier is probably 740 and above. But the thing is that I do know that because lending is getting so difficult, they are looking at the report a lot more in depth. But just try to do what you can to minimize the factors that can hurt your credit, and you'll be just fine. If I missed anything that you would like me to cover, please put it down in the comments. I'll be more than happy to make a video about it. Same thing, if you have any questions about any other financial matters that I might be able to help, again, I have 8 years of banking experience in my belt. I've been doing insurance for about 8 years, and I've been doing real estate for about 4, doing all kinds of financing creatively and hard money lending. So if there's anything in particular that you would like to see me make a video about, please put it in the comments. I'll be more than happy to make it. I'll make sure to read them, and that's about it, guys. So I wish you guys all a great day. Thank you so much for tuning in, and until the next one.